Welcome to this analysis by Corporate Lab. Right now, the global semiconductor industry is in the midst of a massive infrastructure build-out. And sitting right at the absolute center of it all, it's ASML. I mean, the explosive growth we're seeing in demand for AI chips completely hinges on their extreme ultraviolet lithography machines. But the real question is, can this cycle actually keep delivering?
We're going to dive deep into the data today to find out exactly what's going on under the hood of their latest earnings report.
So here's how we're breaking it all down today. First, we'll look at the Q2 2026 headline results, then the core revenue and tech drivers. After that, we'll cover forward guidance and outlook, market and analyst reactions, the bear case and risks, and finally, what to watch next. All right, let's jump right into Section 1, Q2 2026 headline results. Total net sales hit a seriously impressive 9.3 billion euros for the second quarter. To kind of wrap your head around that scale, ASML shipped 91 lithography systems. And you have to remember, these aren't just your run-of-the-mill factory machines. We're talking about equipment so mind-bogglingly complex and honestly so physically massive that you literally need multiple Boeing 747s just to transport a single one of them. This huge top-line beat was largely propelled by a surge in higher-than-expected service revenue, which is something we'll get into in just a second. And then there's the gross margin, coming in at a very robust 54.0%. Now, this is an absolutely critical metric to watch. It reflects just how highly profitable ASML's technology upgrades really are. You see, when they go in and service or upgrade existing machines out in the field, it generates this incredibly high incremental operating margin, and that just pulls up the overall profitability for the entire company. So all that top line and margin strength naturally cascaded right down to the bottom line, hitting a net income of 2.9 billion euros. That translates to a basic earnings per share of 7.59 euros, which, by the way, handily beat the analyst consensus estimates by a pretty significant margin. It's a huge leap from last year, and honestly, it shows exactly why investors are paying such close attention to these numbers right now. Okay, moving on to Section 2, Core Revenue and Tech Drivers. When you look at the revenue mix, it was almost perfectly balanced. You've got logic, which are basically the brains powering all those complex AI calculations, sitting at 51%. And then memory, the storage you absolutely need to handle those massive AI datasets, making up the other 49%. This is super fascinating because it shows us that aggressive capacity expansion is happening across the board. Both advanced logic for AI accelerators and the high bandwidth memory required to support them are getting massive capital injections. Plus, this balance really helps protect ASML from any sector-specific volatility. Now, take a look at the massive regional rotation that's taking place. South Korea completely surged, making up 43% of all shipments. This is heavily driven by memory giants like Samsung and SK Hynix, who are just aggressively gearing up their infrastructure for AI demands. Meanwhile, China normalized down to 14%, which is a drop from 19% in the first quarter. Also, extreme ultraviolet, or EUV systems, accounted for 57% of these sales. If there was any doubt, this pretty much proves that EUV is the undisputed industrial standard for cutting-edge semiconductor fabrication right now. But what's also really interesting is this massive strategic divergence we're seeing in next-generation tech adoption. On one hand, you have Intel, who successfully reached production-level readiness using ASML's cutting-edge high-NA EUV system, which is basically the next major evolution in lithography, specifically for their 18A process node. But then, in stark contrast, you have TSMC taking a totally different approach. They're being highly cautious and have publicly stated they're going to delay their transition to high-NA until 2029, simply because of the massive initial costs of the equipment. So this sets up a really fascinating technological race over the next few years. And this brings us to what might be the true secret weapon of ASML's quarter, the 2.76 billion euros generated purely from installed base management. This is a massive, high-margin revenue stream driven entirely by field upgrades and service contracts on their existing systems. It basically proves that once a machine is sold, it just continues to print revenue for ASML for years to come, really locking customers deeply into their ecosystem. All right, let's shift gears to Section 3, Forward Guidance and Outlook. Management was feeling confident enough to actually raise their full-year 2026 outlook. They are now projecting somewhere between 43 billion and 45 billion euros in net sales, with gross margins holding incredibly strong between 54 and 56%. They explicitly pointed to surging lithography intensity, which is directly driven by those advanced logic and DRAM investments we talked about, as the main catalyst for this upward revision. And if we just look at the short term, Q3 alone is expected to bring in up to 12 billion euros. Just massive numbers. To make sure they can actually supply this monumental AI infrastructure build-out, ASML is executing a massive 30% manufacturing capacity expansion for both their cutting-edge EUV and their traditional immersion systems by 2027. I mean, just think about the sheer physical scaling required to increase production by 30% for machines that are this complex. And because the preliminary demand signals are just so incredibly strong right now, they're actually already investigating another 30% scale-up for 2028.
So, how is the market taking all this? Let's get into Section 4, Market and Analyst Reactions.
A lot of observers noted that this AI capital expenditure wave is deeply, deeply entrenched. The real aha moment here is that the AI trade isn't just about chip designers like NVIDIA or AMD anymore. The entire stack is expanding. And that heavily benefits foundational equipment providers like ASML, who essentially hold a monopoly on the indispensable EUV technology you need to actually make these chips a reality.
But we are definitely seeing a fascinating juxtaposition in how the market is reacting. On the bullish side, you have analysts like Futurum Equities projecting a staggering $80 billion revenue model by 2028, as EUV capacity approaches 110 systems. But on the flip side, the bears remain laser-focused on short-term geopolitical vulnerabilities and export restrictions. And to be totally fair, we have to weigh both sides equally.
Which brings us to Section 5, the bear case and risks.
So critics and skeptics argue that the primary risk centers firmly around geopolitics. Specifically, proposed U.S. export controls are targeting deep ultraviolet, or DUV systems. Now, these are the older but still incredibly critical machines used for everyday foundational chip production. The worry is that this legislation could mandate allied compliance, which would severely impact China. And remember, China is a region that's expected to account for roughly 20% of ASML's total sales this year.
On top of that, skeptics point out that the semiconductor market is historically very cyclical. It has a well-known tendency for boom and bust cycles. The argument here is that any supply chain delays, maybe involving critical optical components or lasers, or even further pushback from customers on the incredibly steep cost of that new high-NA equipment, could force major order deferrals. And obviously, that would significantly disrupt ASML's revenue timeline.
Okay, let's wrap things up with Section 6, What to Watch Next. As we move into the second half of the year, there are a few vital metrics you need to keep an eye on. First up, everyone will be watching the durability of that bookings momentum. Second, we need to look out for the successful delivery and, of course, the revenue recognition of the remaining 4 to 5 high-NA systems expected this year. Third, we'll be monitoring profit margin resilience. And finally, you definitely want to watch for any structural shifts in the export regulatory environment, especially regarding China. Investors are also going to be tracking capital returns very closely. ASML's financial health is heavily supported by an interim dividend of 1.88 euros per share, which is payable in August. But perhaps more importantly, we are watching the continuation of their massive 12 billion euro share buyback program. To give you a sense of the sheer scale there, 1.1 billion euros of that program was executed in Q2 alone.
So, we leave you with the multi-billion-dollar question. As this AI cycle demands ever-increasing lithography intensity, will geopolitical friction or supply chain bottlenecks slow down the roadmap, or will ASML's aggressive capacity expansions rise up and meet the demand? A quick final reminder that this explainer is independent research and analysis intended strictly for informational and educational purposes only, and does not constitute investment advice. Thanks for joining us.